Hello, this is Vance, and this is Tuesday, January the 10th, 2017. And these are the CL trades for today using the slow hand method for price action. Well, it was a down day most of today. I have to say that, in the overnight, we had this area that looked like it was going to be range. I mean, certainly with the overnight, we had prices turn up and turn down. Let me just change this for a second. The prices turned up and turned down on a number of occasions until the open, and that was right at 9 o'clock. And here's 9 o'clock right about here. And then price started to trend down. A couple trades, especially you think that maybe it's going to come retest this bottom here somewhere. You don't have this yet. And then price turns up, turns down, tries to pull up again, turns down. And then from then on, it was pretty much down most of the day. And, like anytime you look at something like this, I mean, I had this channel in here, this wide channel, but I don't know if that's really going to hold. The fact of the matter is that, where do you put this in? I mean, you're looking at support and resistance vertically. Here's the support, here's resistance near the tops. This is a little bit lower, lower highs through here. Price moves down, another lower high. Of course, it moves down further. And then from here, I mean, it really didn't get, once it passed the opening low or the opening, this is where price opened last night, passed down there and it didn't really get much purchase. And later on, it attempted to come back up and move down further and further. And this is where we are right now. So this is it really moved down. Now, let me talk about a couple of things. The first thing is, you're looking at taking trades anytime price is breaking, especially if the momentum is down. The only really, you could argue that this was the turnaround area here. Price moved down, and the reason I was looking at that is because it was a measured move. Now that's the problem. We have this triple top here. So where does the measure move really start? Like anytime you have a double top, you have to think that is the place where prices started to move down. So if that's the case, then we have this movement down to this area. It didn't quite make it back up, and then down here. And so this is really a measured move. Is price going to come back up here? So you could have taken a trade here, but I don't know. You want to kind of wait till it confirms. It never doesn't give you a confirmation. Goes out the other side, and you want to come out of a range, and you see even though this is a double bottom, it moves up higher, immediate failure. So really it's price attempts to go up and then fails. And so from here, how much further is it going to go down? This is the first move down. Is it down to here? Well, you think that. You see we have a bit of a pullback, goes down further. From here. Now, when price gets down to here, it looks like a reversal. You have a second entry long here, doesn't quite make it, pulls back. Here's a failed second entry short right here, and then there's a turnaround. But do you take this trade? I mean, is this really something to take? This is better because it breaks up, pulls back twice, and then to take it from here. But again, that's a tough call. You're looking at the trend seems to be down, and what I was looking for, and especially here in this area, I thought that maybe we were due for a turnaround at that point, because from you look at yesterday's trades all the way down to this area, it was a down day yesterday. I didn't think it was going to continue to go down. I thought that maybe we'd have a bit of a retracement, but price really, it was too weak. Buyers couldn't take prices any higher to this point. Once it got into this area, it moves up and then it just resistance. Here's a range, pulls up, pulls back, and then goes lower, attempts to come up again, pulls back, lower, and then every time it tries to pull back, it just moves lower, continues to move lower to the end of the day. So really, there wasn't any, I was thinking that we might get a turnaround in this area, but it just didn't present itself, especially when this movement here, it did give us a small measured move from here, moves up to this area, pulls back twice, moves up, measured move, and then immediately turns around and really hit this heavy resistance here and then sold off for the rest of the day. So you could say that this is like down here, and then once this started moving down, the momentum just carried it lower. Anyway, that's it for the trades. I mean, I want to talk about something else though, and I had some questions over the last little while with reference to, like why do I trade the 800 tick chart, for instance, and why do I if you notice, the stops are always basically 15 ticks, and the first two targets at 15 and 30. And, I tried to answer that question before, but it continues to come up as a question. I don't know, people don't watch the videos or something. So I thought I'd describe something a little bit differently today and to try to give you a better explanation of why I use the 800 tick chart. I talked about a couple of videos ago. I talked about harmonic variance. I think I deleted that one by accident. I'll have to probably put it back on. But what I was saying about harmonic variance, if you do a time study and to see how far the CL moves before it pulls back roughly 10 ticks, it's about 30 ticks before it pulls back 10. Okay? So anyway, it's a little bit more than 10. But let's use that for just the example. On top of that, so right in the middle of a 30 tick move is 15 ticks. So it doesn't matter where you are entering. And if you look at trades and just without commission, if trades are going to move 50% in one direction or 50% in the other direction, if it's a one-to-one trade, it's like a coin flip, that means that it doesn't matter where you are. If you even choose it in the middle of a harmonic variance, the trade will move 15 ticks. Okay, the harmonic variance on the CL is 30 ticks. That means it doesn't matter where you enter. If you enter right in the middle of that variance, your trade is going to move 15 ticks on a coin flip basis. Now, the point is that if we're looking for trades at areas where we think the probability is higher, that 15 ticks, it should move 30 ticks from there. If we are extremely precise with our choice, before it'll pull back 10 ticks. So if you have that concept in mind, what I've done here is I've drawn on the 800 tick chart here, and this is just for today. This is my 15 tick box right here. This is my 30 tick box right here. And this is my 10 tick, bar. So if you look at the chart and take any bar, now I'll go from the open because the overnight sometimes is a little bit funky as far as movement is concerned. But let's start just the pre-market. This is 8:45 right here. This is about 8 o'clock, 8:45 right here. If you look at this box, it's 30 ticks. Look at how far is that move from this top here. Okay, looks like about 30 ticks to me. And if you look at the bottom from where it started to where it winds up, here's 30 ticks. Okay, so when that move happens now, the 15 tick box. What I look at as far as a range is concerned, a price moves up and moves back, moves up and moves back. So if we have a double bottom and a double top, consider the range. Now, if you take your 15 tick stop or you tip 15 tick box, notice how wide this range is, 15 ticks. Now, if we take a look at the entire chart, let's zoom out a little bit here. You can see 30 ticks. And from where it started to move at the top here, if that's the case, 15, 30 ticks. And we take this start here. Okay, 15 ticks, half the move right here. This move here, even if at the bottom, it's 30 ticks. So we got 30 ticks here. And where's our stop? 15. Ooh, it's underneath. Reversal, not quite 30 ticks here, but look at this here, about 30 ticks. Price starts to move down before it pulls back. Look at the pullback here, 30 ticks. Move down to here. Ooh, another movement, about 30 ticks. Turns around. You get my point? Okay? This is on the 800 tick chart. If you use a higher time frame chart, you will have similar movements because it's 30 ticks or 15 tick pullbacks. But what you won't have is this little bar here. This is a 10 tick bar. And so if you look at where prices turn around, once you look at the 800 tick chart, you can estimate the length of the bar. I mean, as long as the scale is relatively consistent. But look at this. I can see that 10 ticks, this is where's the pullback? Let's say price comes up here. Let's see if I can make this a little bigger to make it easier to see. Remember, 30 ticks plus a pullback. It'll go 30 ticks before we have a 10 tick pullback or more than 10 ticks. Okay. So we've got 30 ticks. Is this 10 ticks? Close. Pull back, right? Are we near the exhaustion level at this point? Here's 10 ticks. 10 tick bar. I mean, I'm looking at individual bars now. Individual bar, is that 10 ticks? Roughly 10 ticks from top to top. 10 ticks. 2, here's 10 ticks. 10 ticks. These 2 together are 10 ticks. These 3 together are 10 ticks. 10, 10, 10. Okay? I mean, they're like, if they're not a doji, they're about 10 ticks, a little bit give or take. 15 ticks is too big. 15 ticks is the width of a range, roughly. I mean, at least, the minimum width of range is 15 ticks. Anything less than 15 ticks typically is really a really tight trading range. So it's going to be usually more than 10 ticks, a trading range. How do I know this? Well, the harmonic variance of the chart, of the 800 tick chart. I mean, we don't need that. We don't need the harmonic. We don't need that to find out, because the harmonic variance is roughly 30 ticks. We can use a stop of 15 ticks, so you're right in the middle of that variance. And on top of that, on an 800 tick chart, it's about 10 tick bars, typically, or candlesticks, roughly. And so it just allows me to see inside the bar a little bit. That's the way I've done it. Now, if you want to use a longer time frame, that's fine. However, the bars are going to be greater than 10 ticks, or it's going to be if you double the size, if you go to, let's say, a 1600 tick chart, if that's the case, this bar is going to be bigger. It's probably going to be 15, 20 ticks, 15 to 18 ticks, or something like that. And it eliminates, yes, you'll still have the same pullbacks, but these bars will be squished together more. You won't have the same kinds of changes. So I use this because I think it imparts more information, and more information on where to get in as far as these bars go. I know that I have a better idea that 15 ticks is my stop. It's out of the it should go 15 ticks on the opposite side. So if I have a 15 tick stop and I'm at the top of a range, I don't know if it's a range until it finishes, I've got a pretty good idea that my trade is going to be 1-to-1. My risk reward is going to be 1-to-1. If it's a tighter stop, if it's less than that, like 10 ticks, for instance, then I think it's going to go 15 ticks in the direction before it rotates back up, or even goes 30, then my trade is going to be, it'll be 1-to-3. Because if it's going to go 30 and I got a 10 tick stop, then I know it's 1-to-3. You see how that's working? 1-to-3 with 10 ticks, 1-to-2 with 15. And the size of the bar is roughly 10, and the size of the range is roughly 15, give or take, or a multiple of that. For instance, it could be 30, but 30 ticks is really, anything more than 30 ticks is going to be the harmonic, that's how far it'll go before it'll turn around. And I'll show you that, because if you look at the width of this wide channel here before it turned around, you see 30 ticks here, 30 ticks here, measured moves, roughly 30 ticks. Before you have a bit of a pullback, 30 ticks. Anything more than that, then you'd have to say, well, it's probably getting close to exhaustion. So if you have 2 legs that are 50 ticks, then you're probably looking at some type of reversal. That's kind of the reason behind this. If you look at this from here, let's say that it starts here and we have this down channel down to this area. Okay? A couple of measured moves within the measured move, and then it pulls back here. That means that we're kind of close. A 50 tick move, like if this is 50 ticks as an example, if this is 50 ticks, then we're probably looking at maybe some type of reversal down here. But where is that going to happen? It didn't quite make it. And what does this mean? Does it mean that it's got to retest this area? Well, I don't know. But it does mean that we're probably close to the end. It's just like looking at the ES and saying, okay, if it's down 10 handles, and this is what some traders use, it's probably near the total movement for the day. What's the movement on average? What's the average swing on the CL? What's the movement? It's about 50 cents. So if we have a $1 move on the CL over a day, then that means that once it gets beyond 50 cents or gets close to $1, we may have some support. It might start to rotate or fold over in the other direction on a daily chart. So I hope that makes sense. That's why I just use one chart. I don't have to use other time frames. I'm kind of got a sense of that. It just there's enough information there for me to glean it for trading on the CL. I hope that makes sense to you, and that's it. Okay. This is Vance. Thanks for watching. Bye for now.